Hello and welcome back to Global Value. In today's video, we're performing a fundamental stock analysis of Checkpoint Software Technologies Limited, ticker symbol CHKP. We're looking at Checkpoint today as a subscriber request. The business is also up over the past year, so their 2022 stock performance was positive, which was in sharp contrast to the S&P 500. So we want to look at Checkpoint today to understand what are we missing? What could the market have possibly discovered about this business this year that's led to this kind of outperformance? Currently, they're trading for $126.15 per share, and they're up 7.5% over the past year. Over 5 years, Checkpoint Software is only up at a rate of 4% annually. Over 10 years, however, they're compounding at a rate of 10.5% annually. And going back prior to the global financial crisis, over the last nearly 18 years, Checkpoint is compounding at a rate of exactly 10% annually. Right now, Checkpoint is trading squarely between their 52-week high and their 52-week low. A little under 2% of the company's shares outstanding are sold short, and Checkpoint is a large business. They have a $15.5 billion market cap. For additional background about the company, Checkpoint Software Technologies is a pure-play cybersecurity vendor. The company offers solutions for network, endpoint, cloud, and mobile security in addition to security management. Checkpoint, a software specialist, sells to enterprises, businesses, and customers. At the end of 2020, 45% of its revenues was from the Americas, 43% was from Europe, and 12% was from Asia Pacific, Middle East, and Africa. The firm, based in Tel Aviv, Israel, was founded in 1993 and has about 5,000 employees. So for our fundamental analysis today, we are performing the Select 6 analysis, taking a checklist-style approach of 6 standard financial metrics to come to a holistic and beginning understanding of Checkpoint based off of their business fundamentals. So this analysis is still a work in progress, and it's an opportunity to learn in public, so it will continue to improve and get better over time. With that said, let's get right into today's analysis. Starting things off with metric number 1, we want their average return on capital over their last 5 years to be above 14%. And there are 2 key reasons for this. The first is that the average publicly listed business earns about a 7% return on capital. And the second is that over the long run, over the course of decades, a stock is likely to return approximately what its underlying business returns. And these business returns are going to be captured here by return on capital. So Checkpoint's returns on capital are almost steady as they come. They're earning returns on capital around 25% for nearly all of these years, and these have slightly increased over this period. Over their last 12 months, Checkpoint is earning about 30% returns on capital, and averaged out over this period, they're earning just under 26% returns on capital. So this is a very strong check coming in here on metric number 1. These returns are nearly 4 times better than that of an average business, and they're almost double that 14% benchmark we were looking for. So this is very solid performance for Checkpoint. Next up for metric number 2, here we're taking a high-level overview of the growth of their business. So we're looking for revenue, earnings, and free cash flow growth over the last 5 years. And this metric is all or nothing in nature. Either all 3 of these are going to be up for this to be a check, or if even one of these is down, this entire metric will be an X. We'll also be including their last 12 months worth of numbers in our calculations here. So over this time, Checkpoint has modestly grown their revenues by about 23%. They had more than $2 billion worth of revenue over their last 12 months. Their earnings are almost flat, but they're down just very slightly, declining by about 2% in total, so less than 1% annually over this entire period. And at the same time, their free cash flows have slightly grown, so their free cash flows are up by about 6% over this period, including their last 12 months. So unfortunately, because their earnings are down, this is going to be an X here on metric number 2, although they did have revenue and free cash flow growth over this period. Then next up for metric number 3, here we're taking the perspective of an individual shareholder in the business by looking at Checkpoint on a per share basis. So we're looking for earnings per share growth over the last 5 years. And so in our previous metric, we learned that their earnings are just slightly down over this period. However, earnings are just the numerator in this earnings per share equation. So we also want to take a look at what they've done in terms of their shares outstanding. Likely a good sign for long-term investors in the business. Checkpoint has bought back 22% of their shares outstanding over this time frame. This is likely great because when you purchase a share of stock, what you're really buying is a fractional ownership percentage in that underlying business. So when a business buys back stock by decreasing the number of shares that they have outstanding, they're increasing your ownership percentage in the business, which is ultimately going to increase your percentage of the business's profits that you're entitled to without you having to spend a dime. So it's almost as if the company is making a partial acquisition of itself. So just like with any other acquisition, we want the company to be getting more value than the price that they're paying. And so you would likely want to dig in and learn more about the business and read through their filings to understand whether this was the case or not. Even still, because of this large amount of buybacks, that outpaces how their earnings have fallen over this period, and this is strong earnings per share growth coming in here on metric number 3 for Checkpoint. Next up, metric number 4 is going to be very similar. Here we're looking for free cash flow per share growth over the last 5 years. Again, we previously learned that their free cash flows are slightly up over this period, and additionally, they bought back more than a fifth of their shares outstanding over this time. So with more cash flow being distributed over a smaller number of shares outstanding, this again is a check on metric number 4 as they've grown their free cash flows per share over this time frame. So far through our first 4 metrics, we have 3 checks and only 1 X for Checkpoint. Next up for metric number 5, here we're evaluating how the business is utilizing debt. So we don't want to be investing in overly levered businesses because during economic downturns, it's overly levered businesses that are going to be at the greatest risk of poor outcomes. We want their net debt, which is their total debt minus their cash and their short-term investments, to be below the amount of free cash flow that the business has produced over the last 5 years. So Checkpoint ended last year with negative $3.8 billion worth of net debt, meaning that after they pay off all of their debt, they're left over with $3.8 billion in cash or equivalents. And at the same time, the company has produced $5.6 billion worth of free cash flow over this period. This is a strong cash position for the business, and they're highly cash flow generative. This is a massive check here, as it looks like Checkpoint's balance sheet and their financial position is in very healthy shape. Then our 6th and final metric, the big metric of them all, we want their average free cash flow to their total enterprise value to give us a yield that's above 5%. If this is the case, this will potentially give us a slight risk premium to the yield of the 10-year treasury and potentially give us a reasonable starting point for evaluation of the business. So we're using their total enterprise value because it takes into account both their market cap and their net debt position, and it's going to give us a more accurate perspective of the economic reality of the business than their market cap would alone. That's going to be more similar to as if Checkpoint were a private company. Right now, Checkpoint has about a $12.1 billion enterprise value, and we learned that over the past 5 years, they produced $5.6 billion worth of free cash flow, meaning that in an average year, Checkpoint is bringing in about $1.1 billion worth of free cash flow. So when we divide their $1.1 billion of their average free cash flow by their $12.1 billion total enterprise value, that gives us about a 9% average free cash flow to enterprise value yield for the business. So this is a check here on metric number 6, as it looks like compared to that 5% benchmark we're ideally looking for, this would be potentially offering us additional risk premium. Also to be aware of is that Checkpoint over their last 12 months has earned just about the same amount, this $1.1 billion of free cash flow, which is right at their historical averages. So a current free cash flow to enterprise value yield for the business is also around 9% right now. So this is a check here on metric number 6. Just because this is a check doesn't mean that you're going to run out and go buy the business. This is not a buy or sell recommendation of any security. Instead, this analysis is meant to be a holistic and beginning understanding of Checkpoint, and while these metrics are simple, when combined together, they can be very powerful. Then something interesting to point out here, Checkpoint does not pay out dividends. Instead, they funneled a lot of their free cash flows more recently into buying back these shares, as we learned in our previous metrics. Then everything we've discussed so far is important, but there's something missing that, in my opinion, is the main reason to analyze Checkpoint software, which takes us on to using a discounted cash flow model to come to a potential fair value for the business. So a discounted cash flow model is just like any other model in any other discipline. Its outputs are going to be sensitive to its inputs. Here we're starting with their current free cash flows per share, which are right around where they've been at averaged out over their past 5 years anyway. Then using historical growth assumptions based off how the business has grown their free cash flows over the past decade to project these cash flows out into the future. So it's up to you to do your own homework here to determine whether or not these historical growth assumptions are going to be potentially accurate and applicable going forward to give us a baseline projected estimate for Checkpoint. So if we assume a growth stage over the next 10 years where they grow their free cash flows at a rate of about 8% annually, then we assume a terminal stage for the 10 years out after that, where this growth rate is cut in half and these free cash flows grow at a rate of 4% annually. If we add in their tangible book value today and we were ideally seeking a 10% rate of return, then it looks like a fair value for the business is right around $147 per share. Using these same historical growth assumptions from today's valuations, it looks like you could reasonably expect about a 12% rate of return going forward for Checkpoint software. Please keep in mind that there are some reasons why this might not be potentially accurate going forward for the business, which is really why it's key to dive in and learn more about the company. Also, please be mindful of the fact that this type of analysis is not financial advice. It's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with the properly licensed and registered legal and financial professionals. In just a minute, we'll talk about our recap for Checkpoint, but we have to address something first. What are the qualitative aspects of this business, especially those around some of the key points for a potential long or a potential short thesis of the company? So starting off with some of the key points around a potential long thesis for the business. Number 1, increasing subscription-based sales and growing recurring revenue should further bolster Checkpoint's stellar operating margin profile. Number 2, Checkpoint's movement into cloud-based and mobile user security offers large growth opportunities to supplement its network security portfolios. its existing customer base may prefer Checkpoint for security consistency. And number 3, customers may adopt Checkpoint's Infinity platform over using multiple vendors for cybersecurity protection. This should further embed the companies and increase switching costs. Then for some of the key points around a potential short thesis of the company. Number 1, cybersecurity is a fragmented market and specialized leading players pop up quickly. Checkpoint could be outmatched if it does not stay ahead of the latest trends and appropriately spends marketing dollars. Number 2, public cloud vendors offer security solutions for their cloud-based products. These firms are much larger and could encroach on Checkpoint's customer base by developing on-premises and mobile security. And number 3, other cybersecurity vendors are offering consolidated security platforms, which could cause bidding wars for enterprise security contracts. So hopefully that offers a balanced perspective around some of the key points for a potential long or potential short thesis of the business. Now it's time for our wrap-up. So in summary, Checkpoint Software checks the box on 5 out of 6 of our metrics. They were just very slightly off from being a perfect 6 for 6 select 6 stock. The company is earning average returns on capital of just under 26%. So very high compared to those returns of a typical business. The company has also modestly grown their revenues and slightly grown their free cash flows over the last 5 years, although their earnings are very slightly down over this time frame. Then the company has repurchased 22% of their shares outstanding, so buying back nearly a fifth of all their shares over the last 5 years alone. Additionally, the business is sitting on $3.5 billion worth of cash, and at the same time, they're highly cash flow generative, bringing in $1.1 billion a year for almost the last 5 years, pretty consistently. Their average and their current free cash flows are about the same. Looking at that free cash flow to enterprise value yield for the business and comparing it with the yield of the 10-year treasury does look like there's a potential risk premium right now from Checkpoint in comparison to the yield of the 10-year treasury. So this may very well be a business that it's interesting to look at in more depth. And finally, performing a discounted cash flow analysis of Checkpoint. If you've done the work and you believe those historical growth assumptions, then it looks like from today's valuations, you could reasonably expect about a 12% rate of return going forward for Checkpoint. So please keep in mind that this would be slightly above how the company has performed over their last nearly 2 decades. And there are reasons why this might not be potentially accurate for the business, especially in a fast-shifting technology space like cybersecurity. So it's worth reiterating that this type of analysis is not financial advice, it's not a buy or sell recommendation of any security, and before considering any potential investment decision, please consult with your financial advisor. This analysis instead serves as a beginning and holistic understanding to help you determine whether it's worth your time and energy to dig in and learn more about Checkpoint Software. One resource that will definitely help you stay up to speed with what's going on in the market and help you learn more about the business is Seeking Alpha. Checking out Seeking Alpha directly supports the channel as I'm part of their affiliate program. So most of you probably know Seeking Alpha as a source of community-written articles on different stocks. But over the past little while, they've actually become a lot more than that with their new offering, which is Seeking Alpha Premium. Premium has a number of different features where you can track buy, hold, and sell ratings on your favorite stocks. These ratings are from the Seeking Alpha community, Wall Street analysts, and Seeking Alpha's algorithm. You can see earnings call transcripts, investor presentations, SEC filings, and press releases all in one place. You can add your own margin of safety targets and get alerts for when your favorite stocks hit that level. You can get unlimited access to Seeking Alpha articles, and you can tailor your reading experience based on the type of investor you are. You can get 10 years of financial data on any stock to help you with your analysis. You can also import your portfolio into your Seeking Alpha dashboard to make researching easier. And if that didn't convince you, the best thing is that an annual plan is only $99. That's only 27 cents per day through my referral link down in the description below. Normally, premium is $239, but they are currently running a general offer for $119. But if you use my link, it's only $99. So check it out if you're interested. So as a value investor, you're ultimately trying to conduct this research as if you're going to own 100% of a business, and you can truly understand the essence of that company and understand what's important and what's not important for that business going forward. So through this deeper research, you'll learn more about the qualitative and the quantitative aspects of Checkpoint, and you'll likely be able to determine for yourself what a reasonably appropriate intrinsic value for the company will be. So with that said, that's it for today's fundamental stock analysis of Checkpoint Software Technologies Limited, ticker symbol CHKP. Again, we looked at the business as a subscriber request today, so I'm happy to make an analysis of the company. It may also provide some psychological relief that the business has been up over their past year, which is in sharp contrast to the S&P 500. So if you either learned something and or you enjoyed today's video, please be sure to like the video, subscribe to the channel for more stock analysis videos, and comment down below what business you want me to take a look at next time. Thanks for learning about Checkpoint Software with me, and have a great day.